life real estate investing show where we talk about real life real estate situations, where we bring you real life real estate solutions. All right, listen, welcome back to the Real Life Real Estate Investing Show. I have an awesome guest with me today that's going to be talking about some stuff that we need to have been talking about a very long time ago. Some people talk about it, but I think some people missed the boat on the opportunities that are available in this real estate journey as it relates to short sales. And I am fortunate to have none other than the short sale master himself. Mr. Kendall is going to be jumping on with us here in just a second. But I definitely want to, invite you all that have questions, that have comments, anything that you have that are relative to the show, for one, and also that are relative to short sales. So without further ado, I'm going to bring Mr. Kendall on up. Mr. Kendall, welcome to the show, sir. Thank you for joining me.
Mm-hmm.
All right.
On the show.
We're gonna get into this thing, man. I say short sales are something that people don't really either A, understand, or B, I believe, in my opinion, people are afraid of them altogether. So I'm gonna get a little bit into your bio, man. We talked about this a little bit. You've been in this game, man, 21 years, buying and selling real estate all over Georgia, primarily
all over the nation.
All over the nation. Okay, let me make sure I give you your just due. And primarily focusing on short sales. Since you perfected a special knack in being, a problem solver, of course, expertise in the pre-foreclosure short sales market. So what I'd like to ask, we'll get a bit more into that. Why short sales? I imagine that would be the first question that people will want to know.
Oh, very simple. I've been in this game since 1999, 2000. And when I started doing real estate, I started like a lot of people, learning the wholesale business, learning the ins and outs of, the wholesale transactions. And one time I was selling a house that I got under contract, and I was wholesaling it. And someone called me about a property, about that particular property I was selling. And we got to talking about the banks and how this particular person was able to get the bank down on the value of the house based off the condition of the property at the time. And he just basically told me he mailed in Polaroid pictures, because back in those days, they had digital cameras, but they were not like they are today. So everybody was still taking pictures with, Polaroid cameras when you would have to go to get the film developed. So long story short, he told me he mailed in pictures, and the bank came down on their price after seeing, the pictures. Sometimes pictures, say 1,000 words. So I literally did that. Maybe 2 weeks later, I had a property that I made an offer on, another wholesale deal that I was trying to get that was listed with a real estate agent. I believe she had it listed for like 60,000. I made a lowball offer because at that time, I didn't know values. I just knew to make the lowest possible offers. And that's what I was doing. That's what a lot of people knew me for back then. I would make a low offer like it was nothing. So I made a low offer of 20,000 on this house that was listed. And the agent called me and was like, "Hey, you need to go see this property." And I'm like, "Wow, you want me to go see the house, but you didn't really say anything about the low offer that I made." So I went and saw the house, and she told me to go see it because the house was in total disarray. And when I got there, I remember what the guy mentioned to me, and I said, let me try something. This was the first time I did it. It was listed with a broker and an agent. I told the agent, "Hey, I'm gonna try something." And I got in contact with the homeowners of the property through the agent. And, I took pictures of the inside, the interior, all the damage of the property. I next dated to Bank One at the time. And literally prior to me next daying it, I dropped my offer from the 20,000 to 5,000 after seeing the property. So I mailed my offer in along with Polaroid pictures. And the bank called me back, and basically they counted at 7,500. So that client owed 79,000.
Wow.
So from that day forward, when I got the bank to succumb and accept an offer of 7,500, even though I made an offer of 5,000, it counted as 7,500. And, I was able to sell it, probably less than a week later for 23.5. I remember it like it was yesterday. So that was my first big deal as a new wholesaler in the game. And ever since then, I've been rocking and rolling. So, I was still, doing, regular wholesale deals, but 99% of the deals that I look for were deals that were over leveraged, that needed a lot of work, that had a loan on it, and that, that was not foreclosed on yet. The homeowner still owned it. They could have been behind. Hell, they could have been current. A lot of the clients early on, they were current. It was just the property condition was just terrible. And as a result, the banks would, drop these reductions on these mortgages, thus short the amount that the property owner owed, and, short the amount that the borrower owed. And as a result, I was able to get great deals, and I've been doing that 20 plus years. That's how it started for me. That's how I got introduced to short sales. And then from there on, I just honed my skill, just mastered what I do, because every time I do a short sale, usually back in the early 2000s, I was dealing with the same people at the banks, dealing with the same departments, answering the same questions, answering the same objections. So I knew exactly what to say and do when it comes to a short sale.
So for the people that maybe looking at this for the first time and may not even understand a whole lot about real estate.
Yes.
Now we talked about how you got into it. Now explain to us, what is a short sale?
Okay,
you gave a little bit of information, but tell us, what is a short sale, and then we'll talk about how that works, how that process works.
Great. What a short sale is the bank agreeing to accept less than what that borrower, what that property owner owes on their mortgage, whether it be the bank, a lender. So if a person owed $100,000, and because of the condition of the house, because of the current market, whether it be the value of the home, recent comparable sales of the home, in addition, with the bad condition of the home, the bank will take a loss, take a reduction in the price on the mortgage that particular owner, borrower owes, and mortgager owes on that property. And, so once again, if a person owed $100,000, I made an offer to the bank for 50. And it was in a line with, the property condition and the internal things that they have to go through to accept a short sale offer and or approval from the investor on the loan, whoever owned the loan. And, they would accept my offer 50, or, they could counter it. So in short, a short sale is the bank agreeing to accept less than what someone owes on their mortgage.
And you say primarily because of the condition of the property. Is that why they would do something like that?
Condition, and at the time when I started in the early 2000s, it was also value. But what I began to learn after years of doing this, that the banks can do whatever they want to do. It was it was a lot of times it was no rhyme and reason to them accepting 70,000 for a loan that was 300,000. They had their internal reasons. Who knows? They could have had, depending on the investor,
Mm-hmm.
and a lot of those loans that were originated in the early 2000s, as they were some bad loans. So as a result of that, whoever got into short sales there early, like I did, were able to capitalize off the mistakes of the banks and the industry as a whole, because eventually the government pressed on a lot of the mortgage companies and cited them for a lot of those loans they were doing early on.
Okay. So for something like that, now, of course, what we understand about real estate is that most banks, or actually banks in general, for the most part, are not in the business of holding real estate. So, and then they have insurance in place for things like that, where they, when those properties are written off, it's best for them not to have those properties on their books by the end of the year, so that they can, kind of sell the idea of investing with them to other investors in what's called REITs. So just to give a little bit of context to folks. Now, now you were able to do this. in a time where many of us, and I'll say I was one of them, many of us were kind of running scared, when the market crashed, quote unquote.
Yes.
How is it that you were able to, and you made millions and millions of dollars, about $17 million, I imagine, I believe it was around. How were you able to kind of, I guess, stick to that niche and master that niche during a time where everybody was running scared?
Well, obviously, when everybody was running scared around, it kind of started in '06, really. A lot of people felt the effects of the crash in '08 and beyond until the market recovered. But it started in '06. But around that time, banks were still lending money. They definitely got tight on the requirements and those crazy no doc loans and all I mean, if you could breathe, you could get a loan back
The
then.
liar loan, they called it.
Yeah. But I didn't create them, I didn't originate them. So hey, so when everybody was running scared, those were the best years in the business for me to this day. You know, uh, so like I said, I started doing that first successful short sale was in 2002. So I had been doing short sales since 2002 forward. So when the market started to crash in '06, in my opinion, and then forward, when the only way one could sell a home is you had to do a short sale because a lot of the values were just over leveraged, overpriced, and everybody was underwater. So when everybody was, weighing out of the game or somewhat scared, I was still working. So everybody was in my field now. Everybody was in my backyard of a technique and a niche I had been doing for years prior. So, like I say, '06, '07, '08, definitely '08, some of the best times for me. I was just, man, you imagine 300,000 to 170, 168,000 to 16,000. Hell, my first one was, like I say, 79,000 to 7,500. And
Wow.
ain't nothing changed. I still, I'm closing the deal with Pavi. Shout out to Pavi. I got the bank down to 102. I'm selling it from 140. So, I mean, they still do short sales. Prior to that, when I did another deal with Pavi, I got the bank down to from 56,000 to $8,000, and that was Chase Bank. So they still do short sales. The big national banks still doing short sales. You just got to find them, and obviously, being that there's not too many people who like to do them correctly. That's one of the main reasons I believe they just don't have the right knowledge of how to process a short sale the correct way. And so they either run from it, don't do it. If they get a lead like this, just ignore it. And in my opinion, they are definitely throwing away a lot of money down the drain from lack of knowledge of knowing how to process a short sale correctly and effectively.
So, and I 100% agree. I've actually done in my career probably a handful of short sales. I'd say more than five, but probably less than 10.
Mm-hmm.
Well, me personally, I had an agent that I worked with who did some for me, but I went through the
Yes.
process and did it myself for a little while.
Mhm.
But you said something that I want to make sure folks caught, and I want to get into kind of the detail of that. You said that even in today's market, that you're still able to do short sales. So,
Most
question would
definitely.
be, with the way values have been overpriced and we have what people consider low inventory and all that, why in the world would a bank do a short sale on the property?
Like I say, when I first started, that was the same questions. That was the sentiment of a lot of the
Right.
clients that I garnered. Why would a bank do that? Hell, the first one I did, the broker flat out told me and the agent that, hey, that's not going to work. Bank isn't going to do that.
Yeah.
And at the time, I wasn't sure if they were or not, but they did it. So ever since then, I've been a believer. But to answer your question, man, early 2000, I want to say the market was, is just as hot as it is now, maybe even hotter. So
Yeah.
I've been doing short sales in a lot of hot markets. Majority of the deals, uh, for the exception of that 3-year span when the market like totally crashed, majority of the short sales I did were in hot markets. So fast forward to now, I don't really think. I mean, it's a hot market, but I believe it was hotter then as far as values.
Yeah.
between like 2002 up until 06, 07. It was burning hot then as well.
It was hotter then because you could do whatever you wanted to then.
It was way more money flowing.
Yes, it
The
did.
difference then and now is, obviously the rates are lower now,
Mm-hmm.
and one would assume and one believes that majority of the homes that were sold in that day, just as a whole, were being sold to. Now as a whole, the houses that people are buying now, people are actually living in it, and consuming these homes and staying in them. But a lot of the properties back in the day, because of the industry and how easy the mortgage industry made it, a lot of the people were not living in a home. So we actually got homeowners occupying these properties. Fast forward now, but yeah, I mean, the banks still do it. There's still people who are going to be in situations now. You know, from now, as it relates to the amount of short sales that I get, might not be as much as I did in the early 2000s, but remember, I don't need a lot. I mean, I was knocking out 20, 30 short sales a month.
Right.
And but that was back in the heyday. The market was different, and at the values, at the rate of return, and the energy that I put into negotiating these short sales and getting the return on my energy and efforts, ain't nothing changed. It's just fast forward to now. Yes, it's a hotter market, and as a result, I'm able to sell these properties that are high. I'm still able to capitalize on this hot market when I negotiate the banks down. One must also say, I made all those millions in that 3-year span because I bought the homes. I would negotiate the bank down from 300 to 100, and then I would turn around and put 30, 40 in it, and I'd sell it at 300 again. Because
Wow.
before the market crashed, people were still getting these loans, but hey, I was buying them my own cash. I was rehabbing my own cash, and I was selling them.
Yeah,
Like
that
how
was
you,
gonna be my next question. For some of those, because I know people, most of the times people hear short sales. You get a short sale and you flip it to somebody else,
yeah,
as opposed to like you said, you actually went in and did the work and then sold it in retail. Which of course would probably
yeah,
make quite a bit more sense to be able to
yeah,
generate the
yeah, yeah.
biggest.
But the ones that I did not do retail on, a lot of times I would make more money than builders or the people who would buy the house from me
Wow,
to
wow,
retail it up, because I made my profit from negotiating the bank. That was my
absolutely.
skill, knowing how to negotiate. It's simple, man. You do these techniques, you do the same thing with the same different banks or the same banks, the same questions, the same responses for 20 years. Like it's easy to master that. It's not hard. I already know when they say no, what do you do next?
Yeah,
They say your offer is too low. What do you do next? You're either gonna do this, or this, and
right.
that's what I'm a master at. It ain't nothing changed. And the psyche of the people that work at these banks, a lot of them, are customer service reps and agents from, in other countries, and I believe that they just are reading a script. They don't really process the information, in my opinion, that they're taught to do when they're speaking to someone like me who's starting or initiating a short sale with that mortgage company and or service or lender. So the responses are the same. It's easy for me.
Great stuff, man. And again, you hit the nail on the head. Talking about when you said, and a lot of people will miss that, but I want to go back to what you said. You made what you said in the sense is you made your money from the negotiation from the beginning.
Definitely.
I think people get that mixed up when they hear many of the gurus of the past and many today say you make your money on the property when you buy. And I think what's misunderstood about that is that it's in the negotiation where you actually make the money. Buying from a seller, doing a short sale, buying from anybody, it's in the negotiation. And I think a lot of times in our I'll say our current world of wholesaling, a lot of wholesalers are not taught the proper way to negotiate. Um, we got a question from the audience. We'll call it
Okay.
the audience. But I want to say it's a bit of a premature question. It's a great question, and I want to get to it, but I want to get to it in just a few minutes. So if you'll hang with us a little while longer, Miss Beatrice, who happens to be my wife, she asked a great question.
Okay.
I want to hang with her a little while longer. We'll get to the question that she asked. But what the question I want to ask, I kind of want to go back to the negotiation part. As a master of doing this, so what would be the initial approach? So you locate a property. I mean, first of all, where do you locate the property? And then how do you talk to the bank, or do you talk to the seller first? This is, of course, for the audience benefit, to help understand how a short sale would go in essence.
Definitely. So, working in short sales, there's a lot of moving parts. You're dealing with the bank, you're dealing with the property owners, you're dealing sometimes with real estate agents, you're dealing with a lot of people. You have to know how to deal with all these people at the same time to make these deals work correctly. But when I do my short sales, everybody that's involved, they know I'm running the show. I'm running the play. I'm the quarterback. Right. If I can't be the quarterback of a short sale, I won't work it. Because if you're out of control of any deal, and this just goes for real estate 101, this goes for business 101. If you're not in control, man, and you leave stuff in the hands of other people, and it just never works right in my experience, especially with short sales. So what was your question, man?
What is I guess in a nutshell, what is the short sale process? How do you know
how you find them, how do you get them, etc. So I tell people ask that question all the time. It's a good question. Now if you're in this business, you've been working in this real estate space, if you're a wholesaler, if you're a buy and hold guy, if you're a buy and flip guy, you still have to get leads.
Definitely.
So whatever means that you do currently to procure your deals, to get your leads, to get just to get leads coming in, you continue to do that. I mean, it's a plethora of things that you could do. Of course, all the things that wholesalers are taught and learn to get leads. So what I tell people now, whatever your means to do that, to get your leads, now when you are processing any possible prospects or leads that come into your office, that come into your database, that come into your world, now what you want to look for are deals that are just over leveraged, because a lot of times people get deals all the time and they say, okay, what's the numbers? And they say, oh, I want 100,000. And that person looks up the comps, it's only worth 120. And then they say, oh, well, the house needs about 50,000 in work. So a lot of people just throw that lead to the side. So now you want to ascertain and look at these deals more carefully and be like, hold up now. According to Kendall, he says, if I get a deal like this that's over leveraged, it needs work, and the key is it has a mortgage on it still. It has a mortgage on it. It is not foreclosed on. It could be in foreclosure, i.e. pre-foreclosure. It has a mortgage on it. You do your regular comparables to see what the value of the property is. If you ever take a lead like this, if someone owes 100 and it's only worth 120, needs 50,000 in rehab, and it has a mortgage on it for 105, that's definitely a candidate, because number one, the repairs to the property makes it not a deal, in this scenario, because one owes 105, is only worth 120. One would think, oh, that's 15,000 in equity. No, but it needs 50 to 60,000 in repair. So the only way that deal could be a deal is to do a short sale. Some people would do a subject to, but I don't do a subject to or a lease option type scenario, but I only do subject twos on deals that are deals still. I'm not doing a subject to on a house that doesn't really have any equity, needs work. So the only thing, in my opinion, that could be would be is a short sale. So if it's over leveraged, it needs work, and it has a mortgage, and you have someone motivated, you still have to have all of the regular necessary things that one knows to get and to process a real lead, as it relates to real estate and finding leads and doing deals out here in this space.
Mm. So let me ask you this question. Well, actually, a couple questions that are relative to where we are right now.
Okay.
A, does the house have to be in pre-foreclosure, or can the mortgage be current? And
Mhm.
B, in a short sale scenario, how does the seller make money if they do it all?
Okay. Well, the house, most of the time, the banks, 90% of the times, the banks want the home to be, behind. But I've done several. When I say several, I've done several, maybe 30 or 40 short sales where the client was current on their mortgage. So I'll leave that up to the bank. So what I do, I'll let him or her know, my client, that, hey, you tell me you're current, but I'm gonna start this process. If the bank does it, they do it. If they don't, they'll tell you. So I
Mhm.
don't just leave it up to my own understanding and interpretation, because sometimes the banks, like I said earlier, the banks can do whatever they want to do.
Right.
They can do the short sale when the person is current, or they'll easily and quickly tell you, no, you got to be a month behind, 30 days behind, 90 days behind. And the logic behind somebody being behind before a mortgage company, a lender, or a bank does a short sale is because, depending on the type of loan, if it's a government loan, a government insured loan, I believe if it's 30 days late, as it relates to any private mortgage insurance that might be on their mortgage, then that can kick in when they're late. Or the investor of the loan, if it's a government entity, FHA, Freddie Mac, Fannie Mae, before you could do a short sale, that's what they want. They want you to be 30 days late. But yes, it's both. I've done short sales when they've been late and them being current.
Mhm. So now, in a situation where a person would where you would a person would allow you to approach the bank to offer a short sale, typically, those that may be familiar with short sales, typically the person that is selling the house doesn't typically make money. The bank doesn't want them to make money because they're taking less than what the original mortgage would be. What is the benefit to the seller to do something like that?
A lot of times, I tell the sellers, depending on the scenarios, depending on the bank, because some banks are easier than others. But yeah, when you're doing a short sale, the bank, the investor of the loan, does not want the borrower, the owner, the property owner, the mortgager, the grantor, to receive any, money or proceeds. Just think about it. If you owe 400,000, the bank accepting 100,000,
Mhm.
they don't want you to make any money. They don't
Right.
want you receiving any money. The only exception to that I've seen early in the early 2000s, up until the market crashed, and probably, you know until the market recovered, is the banks would give a relocation incentive for people.
Mhm.
Specifically, Bank of America was giving like 20,000 sometimes, 10,000 sometimes, and
Mhm.
I would see it all the time. But here, within the last 4 to 5 years, I haven't really seen banks offering any type of relocation incentive. Now, when you're doing a short sale, it's all negotiable as it relates to those things, those items for the homeowner. You can ask for it. You could put it in the numbers. You could put it on the preliminary HUD that the bank requests when you process in the short sale. And if they agree to it, they'll agree to it. And if they don't, they'll quickly tell you, no, we're not paying for that. We're not doing any relocation incentive. But for the most part, yeah, lenders do not allow borrowers to make any money on the short sale. So the benefit for them, because a lot of my clients, they just don't want they don't want a foreclosure on their record. That's a
Mhm.
7 year thing, a 7 year sting on their record. Mind you, a lot of my clients, they could care less, because they haven't been they've been they've been behind a year, 2 years. As far as credit is concerned, if they were credit conscious, their credit is already messed up, per
Mhm.
se. But for those, they're current on their mortgage, and their credit is an issue for them that they're interested about. It just depends. Like I said, some banks can do short sales with the you know person being current, and some banks, majority of the banks, will not, depending on if it's a government-backed loan.
Mhm.
But yeah, they don't want you to get any money, for the exception of any type of relocation incentive. That's the only thing I've seen in my tenure of doing short sale.
Mhm. Okay. So I guess the next question would be, in those types of, so you said, of course, we talked about being able to do a short sale. It starts with the negotiation.
Mm-hmm.
Now, from what I understand, and for the people that may be watching may understand that the banks have a set amount or percentage that they'd like to earn on this particular property that they will typically not go below. Do you have some type of formula in place? Well, first of all, could you explain that? Could you tell the people what that is?
Yeah, majority of the time, if it's a government loan, FHA, Freddie Mac, Fannie Mae, I've seen it range, but so I'll give a range. But majority of the time, if it's a government loan and you processing and working the short sale, and they come out and they're doing, when you're doing a short sale, they always come out to do a property inspection. They're either going to do a full appraisal or they'll do a BPO, which is a broker's price opinion, whereas they will hire a third-party company, usually is a real estate company, to come out to, give an assessment of what they think the house is worth based on the current comparables and the property condition of the home, right? But if it's a government loan, majority of them, they want, I've seen like 85 to 88% in that range because it fluctuates. At first, I thought it was, one set 88, but then I seen 85. So I'm saying from 85 to 88% of whatever the BPO value is or the appraised value is. So the current short sale I'm working, it was a government loan, and that's exactly what it was. It was 88% of the appraised value. But it still was a deal. Majority of the the referral that I got for this deal, it wasn't a deal for them. So they knew I did short sale. So I created a deal. I made it a deal out of thin there, so to speak. But as it relates to what I offer banks, it's just negotiation 101. Like when I first got in the game, I did not know numbers. I did not know my neighborhoods, as well as I do now. So, the only thing I knew to do was just make a low offer. So that's been sticking with me with my short sale. So to answer that specific question, when I'm working short sale, if a person, there's no rhyme or reason, if a person owes 200,000, I'm making an offer of 87, 87.5. It's just negotiations. I mean, it's a bank. At that particular point, I'm working and negotiating with an institution, not a person per se. But even in regular negotiations, between buyer and seller, I mean, maybe not in this market because how hot it is, and there's 10 offers, 20 offers to every property that might be listed. That's a good deal.
Right.
Hell, even if it ain't a good deal, because a lot of these houses are selling, they're gonna be my clients here soon.
Right. I was gonna say that. So see you real soon.
So I like to call it Pula, picked out of thin air,
Yeah.
Whatever you feeling that day, Of course, when I'm going into any short sale, I'll look up, I'll do some due diligence and look up what the property is worth, fixed up. So I know, I still have to do that just like any other assessment of a deal that you might be wholesaling, buying and holding, buying and selling, etc. So I still have to do that. But as it relates to the initial offer that I submit to the bank, oh man, there's no rhyme or reason. I'm just making a low offer. All they can say is no. If I made an offer of 90 and the BPO, the appraisal came back at 70, the bank isn't going to say, hey, you don't have to pay us 90, you can give us 70. The value came back, no, it's not happening. So I'm just going to make a low offer. It's easy to go up, instead of going from a high number that you made initially and trying to go down. So
got it. Now with that, do you typically what's the do you get what's the pushback ratio of people when of banks when you make a low offer? Do they counter or
they better counter, because if they don't push back, I feel that I paid too much.
Right.
So case in point, one of the last deals I did a month ago with Chase, my client owed 56,000. They accepted my initial offer of 10,000. Minus taxes and stuff, prorations. But I was like, damn, they accepted it. The first offer, I should have offered 5.
Right.
I like to haggle. I always haggle when I'm working with a bank.
Right.
Mind you, when I'm doing these short sales and I'm negotiating, it's just me. I don't have any competition. It's not like I'm out here making offers on listed homes.
Right.
There's 50 offers and 50 investors trying to buy that same house. That's why I don't really worry about what the market does, whether it's up or down. If you know how to work and process short sales correctly, you'll always win. And you don't need a million of them. I don't have to have a million of them. Hell, I did one 6 months ago. Hell, if that was the only deal I did for the year, wow, man, I made 130,000 on the short sale. So,
Wow. Wow.
you know, I'm gonna be good regardless.
Right.
And
Right.
in my opinion, if you learn and put this as a tool in your arsenal of real estate acumen, hey man, you learn another skill set, another way to make money in this business. If a deal comes across your desk or come across your way, it's just the numbers do not work, and they have a mortgage on it, and you know the house needs a lot of repair. But you know, I've done some short sales whereas the bank, uh, you know, just accepted a low offer, and the house didn't need a lot of repair. It just depends on whoever the investor is. You know, they might want to get this house off their books. You know, this person could have been this person could be in foreclosure or could have been in foreclosure for 5 years before me starting the short sale. So it's the motivation of the bank. You know, the only with the exception of government loans, you know, they kind of strict. But I've seen government loans take hits. You know, so
Mm.
you know, I never say, you know, what a bank will or won't do. I just throw it out there and see what sticks.
See what
And it's been
sticks.
sticking for me for 20 plus years.
Right. Right. Rod Dimmock says, let him hold something.
Got you.
So, and you know, that's something, man, that you mentioned. Well, I want to go back to the point that you actually made a little while ago. You said that you make it into a deal. Like so in essence, you're a transaction engineer. So you make deals happen. And I think that's a lost art in what we do in the business of real estate investing. I think a lot of times, like you said, you get people all the time, a lot of times that send you deals because the numbers didn't work. Because it's you know, they're so pigeonholed into this one way of getting a deal done. You know, like I want to lowball it and mark it up $30,000 and wholesale it to somebody who don't know what they're doing.
Yep.
That's the way of the world of wholesaling, unfortunately.
Yeah.
So when they come across something where they can't make that $30,000 margin, or they don't see that they can make that $30,000 margin, those are the leads that they throw away, or those are leads that fortunately you get because you know you're a master at what you do, and you know you know learn that you craft, you know, become a master of the craft.
Yes, or more than not, those are the leads that we will, me and you included, will see on our email that's been floating around to everybody and their mama because they negotiated. The deal was not a deal from the start.
Absolutely.
You know, they got a price and they were happy, you know, to put it on the contract, and they just throwing it out there to see if it'll stick because of we in a hot market. But you know, there are some people who paying, you know, more than they should be, in my opinion, but that's not everybody. So you know, those are the deals that, you know what, to get leads, I just need to look at my email addresses, pull up all the properties I got and see that are still out there that I've gotten the same property 3 times from 3 different people with 3 different numbers.
Yes.
Those could be some leads for me, because more than likely, you know, if they could have a loan on it, you never know. You never know the reason why that initial investor or wholesaler contracted that properties for a high price, or he or she is just being greedy. I don't know. Who never knows the situation, but
yeah, for the most part, that's what it is. They're being greedy. And I think the greed comes from the ignorance, right? You know, when people look at, you know, like you said, we get several different leads from several different people with different prices. And that's because the first person, A, didn't know how to negotiate it originally, or B, the person who got it from the first person who now has it, that the first person don't know that they got it, didn't have sense enough to talk to the original person to say, hey, how can we work something out so this still can be a deal for whomever we pass it on to. Right. And we still break bread. I mean, it might not be 30,000, maybe 10. You know, but it's still a deal that we can work, and we can do that on a volume base, you know, on a volume basis. You know, I don't know. That's where the class is going to have to come back and get done.
That's a whole nother broadcast.
Right, definitely.
In itself.
Right. So this brings me to the question that we held off on.
Okay.
Which is a really good question. Beecher says, what can we expect post-COVID for short sales?
I expect and hope a lot of short sale deals, you know, whether
Yeah,
it be the only thing, and only thing we do not know is when. I
right.
was hoping this summer, it didn't happen like that. Whether
Definitely.
it be 6 months to 2 years, what I'm doing right now, just getting as much money, doing as many short sales as I can do. But post COVID, I mean, it's still going to be some short sales. Unfortunately, a lot of people buy more than what they can afford. Even
Hmm.
even now, I mean, there's a lot of people who, as a result of this COVID, they were displaced from their home, from their job, and hopefully those families, those individuals got jobs and back in the working force and working and bringing income in for their families. But there's a lot of people who did not. And for those, yes, the bank is going to try to do some type of forbearance, loan modification. But know this: no matter what the bank do, if one does not have income to pay the modified loan payment, one does not have income to pay the mortgage, it's just delaying the inevitable. So
It's a matter of time.
that's where the I don't know when it's gonna happen. Could be a 6 months from now. It could be next month. It could be a year, 2 years from now. But it's gonna happen. I definitely say within 2 years or so. And the
Definitely.
only reason, in my opinion, that it would not happen if the government just keeps pacifying us and printing money and putting it into the economy to try to stop the bleeding. But that is going.
That's
That
just
in
kicking
itself,
the can down the street. That's just
yeah,
kicking the
yeah,
can down the
that's
streets.
all it is. It's still gonna happen, but
Yeah.
post COVID, it's still gonna be short sales. Uh, to the tune of the short sales deals I was doing in the early 2000s. A lot of people saying no, maybe not that, but you never know. It could be worse than that. We don't know, but I do know this: if you learn how to do them now, learn how to do them right from the right person teaching you, whether it's me or someone else that's knowledgeable and has been successful and mastered the art of doing the short sale. Because in my opinion, it is an art. It's an art to it, man. You're dealing
Definitely.
with people. You're dealing with people on the phone. Yeah, that's really what you're doing. Know how to talk to people. Knowing how to escalate. Knowing how to get managers and call vice presidents on the line if you
Right.
need to. Like I go that extra mile. Like I've worked short sales 2 or 3 years, not because of me, just because number one, the bank just didn't, for lack of a better word, excuse my French, didn't think they shit stain it as it relates to the value. I mean, the bank thought,
Stuff.
oh, we want 100, we want 100, we want 100. It's not happening. Pull comes. Look at the market. The market tell you what's going on.
Yeah.
And in addition to just the market telling you what's going on, the property needs 80,000 to work.
Yeah.
Bank of America rep, like it's not happening. I don't care what you do. So what happens for those clients? I still work with them. I say, hey, the bank isn't doing nothing. They're not foreclosing on the property. You still staying in it, just stay in it, until the bank get right. And usually what happens, the bank will go ahead and get right, and they accept that correct offer. And in some cases, and not in some cases, in multiple cases, I've started a short sale, and the bank did not want to accept my $5,000, $10,000 offer in the beginning. 6 months later, they released the lien on the house.
Wow.
I've
Wow.
had that happen about 7 times to date. Yeah.
Wow. Wow.
It made no sense to me. Like, okay, y'all don't want to take my 20, but y'all just gonna release the lien on the house. Okay,
Yeah.
we'll take that too. I'll buy it. You
So
know.
I found myself in a situation, actually a couple situations years ago,
Mm-hmm.
where we started the short sale process.
Mm-hmm.
And I want to get into the documents and all that stuff that has to be put into that. So we
Mm-hmm.
started the short sale process. We put together the package, submitted everything over to the bank. The bank
Mm-hmm.
said no.
Mm-hmm.
Then the approach was then to go back and have a conversation about buying the note at a discount.
Mm-hmm. Mm-hmm.
They sold us the note at a lower amount
Wow.
than
Wow.
they would even take it for the short sale.
Yeah. Yeah. I'm done. I haven't bought too many notes, but the two notes that I have bought, I mean, they equated to great deals, man.
Yes.
Same thing happened. I bought a note for 7,000 from a bank. I
Mm.
end up selling the property for 117,000, but I
Wow.
offered y'all 50 initially. So the
Wow.
same thing happened, So
Yeah.
yeah, yeah.
I still to this day don't understand that.
Number one, is depending on who the investor is,
Mhm.
could have been the motivation of the investor. Number two, if it was a government loan, as it relates to if that loan had any private mortgage insurance on it. Some of these some of the loans that have mortgage insurance on it, you have to wait X amount of months, X amount of days before you can file a claim. So,
Right.
maybe that was it. So no matter what they got from you, so if they were to sell the note to you, they're going to get that money and they're also going to file a claim.
Right. Absolutely.
So it
Absolutely.
just
You're right about
depends,
that.
who the investor is on the loan ultimately.
Shout out to the grind guy. He said, "What's up, fellas?
What's up? What's up?
Shortsale
What's up?
Master."
Mm-hmm.
Yes, indeed. Yes, indeed. So, what is a so most people don't understand, like when you talk about the short sale process.
Mm-hmm.
Now there's some documents and everything that has to be put together.
Mm-hmm.
Can you give us a quick? I mean, of course, we don't want to get into the
I
whole.
can give you the whole thing. It don't matter.
Okay.
Yeah, from A to Z. Obviously depending on who the lender is, depending on who the bank is, depending on who the investor is for that particular loan. Most of the documents needed is going to be an authorization, a third-party authorization that is given to us by the homeowner, by the property owner, by the mortgager, to give us authority to call that bank on their behalf to even start the negotiations, to even start the short sale process. That's number one. Number two, depending on who the bank is, even not depending on who the bank is, I include this particular document in all of my short sales that I'm processing. And what that is, it's called the RMA, a request for mortgage assistance. It's a generic standard one that I can download. Anybody can download. And what that is basically the homeowner puts their name, the address, the mortgage, loan number, the last for the social, if the home is listed, just all their pertinent information. And then I'll also have my clients fill out not an income income statement. Whereas if they are working, because a lot of my clients are not working, but if they are working, just a statement a financial statement that shows what their income is per month, what their debt is per month. That's one of the required documents. So, and then those are the initial documents that I use to start the short sale process. And if there's any other documents that are proprietary, because some banks have their own bank documents that they only want you to use. So, but for the most part, I have all of the documents from the banks that I've been using. I've been working short sales for over the years: the Bank of America, the Chases, the Wells Fargos, the Aquans, the PHHs, the SPS, all these banks. I have all their forms, but for the most part, they'll use any third-party authorization. They'll use any if it's a government-funded loan, there's a specific RMA most of the time that the bank, that investor for that servicer wants you to use. So those are the initial documents that I submit in. Number one, the authorization. I submit the RMA, and I'll submit financial worksheet. And then if the bank wants more documents, I'll let them tell me, because when I first started this journey in 2001, 2, there was a lot of documents one needed to provide to do a short sale. They wanted tax returns, last 2 years tax returns. Man, they wanted bank statements, last 2 months bank statements. And a lot of my clients, I still did them because a lot of my clients, they didn't have a bank account.
Right.
They ain't filed taxes in 4 years, so it was easy. You just had to write a letter saying, my client hasn't filed taxes. My client doesn't have a bank statement. Doesn't have a bank account signed and dated. But here, within the last 5 years, all of these requested and required documents that I used to provide early on in my career, the banks have not been asking me for.
Wow.
So I haven't provided them. So not to say that that's 100%, but I used to just put that customarily or ask that customarily of my customers. I don't do that anymore. I'll just give the bank an offer, authorization, RMA, and any other document that the bank needs. I'll let them tell me. But usually that's really what they want to offer. They want the short, and the biggest document, the most important document is the initial short sale agreement that I have between me and the property owner.
Great stuff. Great stuff. So, I have to address the we'll call him an elephant.
Come on, elephant, let's get it.
Rod Dimmock, man, is off the chain. This dude crazy.
What he said? What he said?
He said, "Yeah, man, he's put so much stuff in here. Is he married? My homegirl, Asia, I don't know what that name is."
Man.
He says, he should have. He definitely. Oh, now John says he definitely should have a course. And I definitely want
it's coming.
Yeah, we definitely want to talk about that. What is this? Iran just going crazy over here, man. I don't know some of the stuff he said. I can't even repeat it. But he did say Carmichael was the first guy you linked him up with to get outside the box. And then no, I can't say that one. He asked John. He said, "John, do you vouch for this guy?"
Oh man,
right, crazy boy. But listen, man, you have dropped some major jewels. We got it. What's the course, man? How can people get down with this with the teaching?
Man, I'm finally putting the finishing touches on it. Man, I had a big setback, man. A lot of the data that I created for the course, I don't know, man. I misplaced the drive, so I have to create it all. But which was a good thing because now the way that I'm going forward is totally different than what I was doing before. So it's much easier, less cumbersome, and easier time to get out the product, and and just to put it out here, just to see what the consumers like, what people like. What they might have questions on, what they think I could, do better as it relates to explaining, because I know what I'm doing easily. It's all about putting in a digital format in a manuscript that people can learn from easily and execute it. Because short sales, it is a bunch of moving parts, but when you know how to master them, what's the problem? Because when you're doing, if you're already in this space and you're a wholesaler investor, there's a bunch of moving parts anyway. Meeting with a seller, signing a contract, whether you physically meeting to send them a DocuSign, it's still moving parts. Definitely. You're already doing some of these moving parts anyway. So now just, get this skill set, learn how to master it, and man, make a lot of money, man. It's money to be made. You just got to know how to negotiate. And that's just number one of the biggest things you need to learn in real estate as it relates to wholesaling, just being a buy and hold investor, or any avenue, any facet of this real estate space, in my opinion, knowing how to get the good deal, i.e. the book that was written by Donald Trump, The Art of the Deal, like, come on, man, that's the title of his book. And I'm pretty sure the art of the deal is knowing how to negotiate a deal correctly.
And it's okay to say his name on this show too. It's okay.
Yeah. Knowing how knowing how to recognize and go outside of the box to convert a bad deal into a deal. So that's what I specialize in. Short sales is my thing. That's what I like doing. And, I just love it when, you get that email from the bank that say the short sale has been approved, man. I'm like, man, that's
money in the bank.
Already cha-ching, man. Cha-ching, man. Love it.
So let me ask you a question. As a wholesaler, as a person, as a wholesaler, would you recommend that this be the first approach to doing deals?
I would recommend, this definitely being in your tool bag of knowing how to assess deals, being that it is moving parts, for me, once I did that first one, I was hooked,
But they got to understand that there's a process. I want to make sure it's a process. So, like you said, it's been years, like a couple of them, you said it took a year or so.
Yeah. So it really just depends on the person, man. I wouldn't say no to this not being a valuable way to get into the real estate space, because some of the things you need to learn and do to get short sale leads are already things you need to learn and do to get regular leads anyway. So I'll just add to that and just say, once you're out here and you're getting the leads the way in the way you're already getting your leads, just knowing how to ascertain whether or not this could be a good short sale deal, or this a good subject to deal, or a good lease option deal. But for me, any deal that is over leveraged, the person owe more than what the house is worth, and it needs work, and it has a mortgage on it. It definitely has to have a mortgage on it. If it doesn't have a mortgage, you can't short sell it.
Can't short sell, right?
Not the short sell. And it has to be in pre-foreclosure, not a foreclosure. Because I have a lot of people say, "Oh, I got this foreclosure." Well, if the property has already been foreclosed on, you can't do a short sale on it. So the homeowner, the property owner, they still have to own the home. It has to be over leveraged. The numbers just do not work out for you and your process of how you inspect your deals or come up with the numbers for your deals. Hey man, that might be a possible short sale lead. And making certain, and this is something you were supposed to do anyway, making certain that the homeowner is motivated.
Absolutely.
In a short sale, you definitely want the homeowner to be motivated, because a lot of times, like we discussed earlier, there's no benefit for the homeowner other than them not having a foreclosure on one's credit report. And for them, for a lot of those clients, that's what they want. And then I come across a lot of short sales that the homeowner is deceased. So for the estate, the executor or the administrator of that estate, the benefit in it for them is just get rid of this debt, man. A lot of times they just want to, they don't want it to go to foreclosure. They will sell it, and then depending on the rapport that you built with that motivated seller, him or her, they'll just let you do it. Because there's no sweat off their back. They're not liable for the loan if they are a heir of the estate. So in most cases, because a lot of the heirs, none of the heirs that I've come across doing short sales, once one has transitioned or passed, they don't take on the responsibility of that mortgage or nothing. Right. They don't do like assume the loan. Majority of the time that particular client is, like I say, months behind, 6 months behind. And, they got heirs that live in the house for 2 years. They ain't paid one mortgage payment. So, and then you have the administrator of the estate want to get that person, that other relative out of the house. So that's the motivation, a lot of times that I've came across when I'm working short sales on probates, when someone has passed and there's still a mortgage on the home. And, hey man, those are the easiest ones. The one I just closed, that was scenario for it. So those are easy. I mean, there's really no documents to give. The person is deceased, has transitioned, went on to glory.
So I got something else I got to say, but I can't let this comment from Ryan pass. Man, Ryan tripping today, boy. Hey, but listen, I appreciate you being on today, Ryan. He says, Luron and Duron. We selling this course for $49.95. Go ahead, cut the call. This too much free game. He says, cut the call. The rest will be $10,000. Hey, listen, I say, we definitely need to look at how we can package this, man. Ron know a little bit about what we do as far as packaging courses and stuff like that. So we definitely will have a conversation about how we can.
Definitely. Yeah. I'm open to it, man.
Shout out to Cassiano for joining us today as well. How does someone get short sale leads to you? I don't know how to do this deal. The numbers don't make sense. How do I get short sale leads to you?
Easy. Kendall, my first name, KENDALL at shortsalemaster.com. Just email me. Also, you can go to my Instagram. It's at Shortsale Master, and that's spelled SHORTSALEMASTER. On Facebook, I have a Facebook group, and if you email me, I'll send you a link. You can always follow me on Facebook as well. It's the same thing, Shortsale Master. You can find me, and that's spelled SHORTSALEMASTER. So those are the ways you can contact me, or you can call me, 404-914-0905.
Good stuff. Hey, listen, Kendall, man, You have dropped some major stuff on us today, bro. Okay, I got one more question. I know we over time. You got a few more minutes?
Oh, definitely. Let's get it.
Okay, I'm gonna present you with a scenario. It's one kind of near and dear to me, so I'm gonna present you with the scenario. Then we're gonna let you roll.
Okay.
Situation where, like you said, a family member is deceased. It has a reverse mortgage on it. The bank will entertain a short sale. What's the process of getting that done? In your quickest, shortest manner, if you can explain.
Number one, I'll call and see who the bank is, see what they need to process a short sale. Most of the time, if it's a probate scenario, they're going to want administrative documents for whoever is the estate, or the administrator or executor of the estate. That's first and foremost. A lot of times they won't even speak to you without that. Fax that in, and being that it's a probate situation, just make an offer, make a low offer. Yeah. What do they owe?
I think it's like 100,000, something like that. It's something simple, I've had the conversation. I'm just waiting for more details about how to make, how they want me to help them proceed. But that's something we'll definitely talk about.
Okay.
So they put your number in. Cool. Thanks, Ron. He said, what's your Cash App? The Cash App is real life real estate investing.
I hear that. I give you my wiring instructions.
Right.
Because what I'm going to need is going to be more than what you can cash at.
More than what you can cash at, right?
Definitely.
Hey, but listen. I was joking, but I was serious. Now, of course, Kendall, if you want to share your Cash App, for people that want to contribute to you, by all means, you can do that. But also, I think we have it in the comments. So we're on a new platform now, and I don't know where any of this stuff is. My folks said,
okay.
For the folks that want to, give an offering, we'll call it an offering to the show. You can Cash App us at Real Life Real Estate Investing, $ Real Life Real Estate Investing. Make a donation, whatever it is, because this is a labor of love. Folks that come on this show, we don't pay them to come on the show, and we don't get paid to put this together. So it is a labor of love. So we certainly appreciate your donations, and I need to get in the habit. My folks, my producers keep telling me I need to get in the habit of asking. And I'm like, man, I don't know how to ask people for money, man. But hey, listen, it is what it is. But if you want to share your information as well, Kendall, you certainly welcome to do that as well.
Once again, you can reach me at Kendall, KENDALL at shortsalemaster.com. That's spelled SHORTSALEMASTER. On IG, Shortsale Master, all one word. Facebook, Shortsale Master. Let's connect. Let's eat. Let's turn these bad deals that y'all parading around as good deals in this market to some real deals.
Real deals.
Let's do that.
Hey, listen, brother, I want to thank you again. I will have to say, shout out to all the guests that have been on the show. Thank y'all for stopping by. Thank y'all for being a part of the show. But Kendall, you killed it today, man. You told me yesterday, you said this is going to probably be by far one of the best shows that I've done. And I got to tell you, brother, it will certainly be one for the history books, because you gave up a great deal of knowledge today, and I greatly appreciate you for it.
All right, I appreciate it, man. Nice to see everybody and hear everybody tuning in and getting some knowledge, providing value for you real estate people out there. Let's get it, man. It's going to happen. For sure. Mark my words. 6 months to 2 years.
It's coming.
I'm going to be rich again.
You know it.
I'm going to be wealthier.
For sure.
Somebody got to do it.
Let's see. If anybody beat these ratings, man, put me back on. Ron, something else. Now, Ron was on, and he definitely was a high rating show as well. Michael, come on, man. Listen, I see you chiming in. I appreciate you coming on. You on deck, bro. We got to get you on as well. Sure. So listen, this has been a great show, man. Great information. Again, I can't thank you enough for sharing information with us today. And we certainly will get this out and replayed and syndicated to the folks that can, listen to this information again. And it's been real.
Let's do it, man. I appreciate it.
No doubt, no doubt. So, folks, thank y'all for tuning in. This has been the Real Life Real Estate Investing Show. As you know, we talk about real life real estate situations, but we certainly bring you real life real estate solutions. Thank y'all for watching and have a great rest of your day.